Hey guys, in today's video, we're going to take a look at different personality types and the pros and cons that they have when it comes to your trading, a few advanced pattern formations, a reversal trade that I like but can't take, and an awesome potential breakout opportunity. So once again, we're going to start off things by hopping straight into the charts. But before we do, I want to give you a quick update on my trading. This is something I want to do each and every week, but due to trying to keep these videos short and sweet, I've gotten away from it. But I'm still stuck in that consolidation. If you've been following us since week one, you know I got off to an amazing hot streak, right? Hotter than I usually am, hotter than I expected. And I told you that we're going to revert to the mean at some point. And, you know, you can see on the chart in front of you, my past 13 trades have kind of been a mixed bag. Up, down, up, down. We're in a sideways consolidation. So still hopeful that this is going to be the drawdown. We're not going to have a kind of a big drawdown. I'll take a sideways drawdown before the next big winning streak comes. But you never know. We're going to talk about personality types in a little bit, but thankfully my personality type and really my experience as a trader allows me to not get too concerned over the smaller periods of time, but more so focus on the bigger picture and be more longer term process oriented. Again, we'll talk about how that personality type can be very beneficial to you as a trader later. But chart-wise, let's start off on the euro pound here. And if you're new, these multicolor boxes you see in front of you, those are going to be called our VS1 levels. Essentially, those are called visual structure and support, or structure and resistance levels. They show you where past levels of major and minor support and resistance are based on how you kind of code them. Right now, I have them, I think, on the weekly and the daily. So they're showing me higher time frame and current time frame. And what you see here on the euro pound is that we're currently creating a key level of structure. You can see we bounced down here around 85.50s and a few times, right? 1, 2, 3, and really the fourth time right here. And that's created a minor level of support. Now, the past me, and I don't know if many of you guys have heard this, but something I heard when I first got into trading is that the more times a level of structure holds, the stronger it is. And that was something that I kept with me for a very long time. However, about, I don't even know what it is now, 5, 8 years ago, I actually changed my mindset on that. And it wasn't just a bright idea I woke up with. It was me continuing to educate myself to learn and become a better chartist. And something that I now say to our traders is that the more times a level of structure is hit, the less important I believe that level to be. Now, it depends on how it's hit. That's a big thing as well. But typically in the market, it's like real estate, right? Good moves don't last. If it's a very important level, you're going to see V reversals like we do right here, for example. Now, in this particular formation, we have two things happening. We have previous structure being hit multiple times. We also have the highs, getting lower, right? So our first high is a big retracement right there, big in comparison to the other ones. And then you can see we get a smaller retracement. We come down, we get a little bit higher retracement. The wicks are in about the same area before we come down once again. And what I read from this is a sign that, hey, the sellers are winning the battle here. Yes, they haven't been able to break that previous level of structure, but they've been rejecting the bull's advance each time the buyers try to push up. Now, this is not anything I would say to sell right now unless you're a very aggressive trader, but I would expect a bearish breakdown from this level, meaning a break of this structure level. And if we do, the next place that we're likely to continue to, right? I didn't bring up those magical boxes for no reason, is a retest to our next structure low. And I would say the start of that level is going to be right here at about 84 cent, with the extreme level being about 83. So you can see we're currently trading at about 85.50s. Lots of potential downside opportunity here on the euro pound. So the next pair we're going to take a look at is going to be the euro yen. I'm sitting here on the 4-hour chart, and this was a pair we looked at last week. And guess what? My prediction was wrong. Now, it wasn't a trade that I actually got involved in, anything like that. But we predicted a move upward from, I believe, right around here. This would have been last week, the 21st, I believe. Yep. And we gapped down and continued going down. So never a trade, never an opportunity, but a wrong prediction. And that's going to happen a lot. There's no embarrassment in making a wrong prediction, right? That's trading for you. I got the question the other day, Akil, can you teach me a strategy that will never lose? And I just stopped laughing about a couple minutes ago from that question. So you got to have realistic expectations. But what we have here, we did get a nice hold in reverse right here. What we have potentially setting up for the week ahead, if we can continue to make a move up, is going to be what's called a Cypher pattern. This is one of our advanced pattern formations, a little bit different than the M and W ones, but I'll show you what it looks like. Our X leg, or our initial starting point, is going to be up here. This is going to be called our X to A, our impulse leg, right? This is what sets off the pattern. The first thing that you need to identify when you're looking at a pattern is this initial swing, high to swing low in this case. That's going to be our X to A. The first retracement is going to be our A to B. Now, in the Cypher pattern, which is a little bit different than bats and Gartleys and I always get sharks and butterflies. I get sharks and crabs confused. But in most of your harmonic patterns is that we're going to have an extension for that C leg. And then for the D completion, we need to rally all the way back up above the B to our 786. And that's going to give us a potential bearish Cypher, with that zone being from the C completion, the D completion right here, all the way to the X leg. And once that X leg is violated, then the pattern is violated and it should no longer be taken. Now, speaking of ciphers, I also had two more on my radar as well. On the left, you're going to see one on the SMP that has already completed. It's still within the completion zone. That yellow box is going to be the zone of where it starts to be valid to where it's invalid. And on the right, you're going to see one potentially forming on copper as well. Now, I don't personally trade advanced pattern formations on any of these markets, but I do work with a lot of traders who do, and they've had some pretty decent results. As always, you just want to make sure that you test it first, right? Different markets perform differently. Different stocks and pairs and indices and commodities within those markets perform differently as well. And it's always important that we fit our strategy to the personalities of the pairs or assets that we're trading. Lastly, I want to take a look at the New Zealand, Canada, and New Zealand dollar is going to be very similar. So if you take a look at New Zealand dollar, you're going to see a similar setup. And this is one that has my interest. It's not something I can trade, however, but we ended the week, if I just get rid of this VS1 level real quick, we ended the week with a very beautiful 3-bar reversal here, right? You can see the high momentum bar down. We had another high momentum bar. It was smaller in range, but still a pretty strong bearish candle. And we followed it up with a doji candle. This is also an inside bar, right? So it's a bar that completes within the range of the previous bar. And then we ended the week with a higher high, higher close, or an inside bar break to the upside. So, same thing, just depending on what you're looking at. This is a pretty decent reversal sign. And if we were to continue higher, there's a lot of room of opportunity back up to about 89 even. Now, the one red flag that I have in this trade, and this is based off of how I trade, and you guys know I go through a very strict process: identify, predict, decide, execute, right? And I need to identify what price is done. Based on what I identify, it allows me to make a prediction. What puts a red flag, I guess, or a halt in that systematic approach is the fact that, right, our previous level of structure was right here. These are our structure lows. You can see that we indeed broke and closed below it. So once we break and close, I have to identify we have a break and close. That means I have to predict that we're likely to continue lower. If my prediction is that we're likely to continue lower, I can't involve myself in a trade to the upside, because that goes against my prediction, right? You see the contradiction there. So this is a setup that I like. It's just not at the right location. And what's cool about having that systematic approach, identify, predict, decide, execute, is that it takes the emotion, the feeling out of the equation. You have to follow the process. If what's on the chart doesn't follow through with the process, then you cannot take the trade. Now, speaking of process and the systematic approach, let's talk a little bit about trading personalities, because there are a few distinct personalities that very highly favor this approach, but there are also some that really struggle with going down in it. So why is it important to understand your personality? Well, remember this. As a trader, you are an entrepreneur. You are a business owner. And the good part of that is that you have financial independence. You can achieve financial freedom, time freedom, right? There's no ceiling stopping you from going up. You have control over your life. That's a big thing of why a lot of entrepreneurs get into what they do. They don't like being controlled. On the downside, however, you are the boss, right? That means there is no supervisor. There is no one looking over you, no one evaluating you. You are in charge of yourself and you are in charge of your own process. And a key part of progressing in life and developing as a person, developing your business, is understanding yourself, understanding what you're good at, understanding what you struggle at, and being able to set up a plan to put you on the best path to success. So by understanding your personality, you start to begin to see, hey, these are my strengths, these are my weaknesses, and you can start planning an attack on how to develop your business around that, how to do things that are more in line with what your strengths are, how to maybe avoid things that are in line with your weakness, or at least put yourself in position to be aware of those weaknesses. That way you can pay more attention to them and make sure they're not dragging you down. Now, the two tests that I recommend, and I take these usually every 2 years, are a DISC assessment and a test called 16 Personalities, or I guess the website's called 16personalities.com. They're both great tests. They are both kind of completely different, but today we are going to talk about the DISC assessment. And the DISC assessment categorizes you, or it gives 4 categories of personalities. There is D, I, S, and C. The D is dominance, the I is influential, the S is going to be steadiness, and the C is going to be conscientious. The C is going to be conscientiousness. The C is going to be conscientiousness. Conscientiousness. There you go. Close enough. You can see that's one of my struggle words. I curled up in a ball as I got close to saying it. But understand that although this assessment is going to rate you and categorize you in one of these 4, it's actually going to give you kind of 2. It's going to say your dominant personality type is a D and your secondary one is an I. It's important to understand that all of us have traits from all of the different categories. No one is only a D. No one is only a S. We all share traits from all 4 different categories. What this assessment is showing you is where your dominant traits lie. Are you more here but closer to this area? Are you more here but closer to that area? And what we're going to do in today's video is we're going to talk a little bit about the pros and cons that are involved with being under each personality type. So the first category is going to be D. This is the dominant category. I'll read you a quick blurb. D styles are motivated by winning, competition, and success. They prioritize taking action, accepting challenges, and achieving results, and are often described as being direct, demanding, strong-willed, driven, and determined. You can see a lot of those traits are very positive traits when it comes to becoming an entrepreneur, becoming a trader, venturing off on your own and kind of ignoring what everyone else is telling you and having that inner drive, that inner motivation to get something done, to bet on yourself. Scrolling down some, you can see some examples of D-style goals are going to be strive for unique accomplishments, explore new opportunities, maintain control, achieve independence, which is big. Some of the challenges are going to be patience, sensitivity. That's not necessarily a challenge in our category as trading because that's a lack of emotion, but explaining details is going to be big. Another challenge that isn't listed but is specific to trading in the D category is that Ds are very results oriented, right? Everything they do is set up to achieve a certain result. And in trading, we know this can get us into some trouble. We want to shift the mindset. We want to shift the paradigm to process over outcome, meaning the process is more important than the outcome of any given trade, because we know that in trading, there are many times we can do everything right and still not get the outcome that we expect. So by simply judging ourselves on only the outcome, we're putting ourselves in a non-win situation. And for Ds, that could be somewhat of a challenge. So next is going to be the I category. And a quick blurb, once again, I styles are motivated by social recognition, group activities, and relationships. They prioritize taking action, collaboration, and expressing enthusiasm, and are often described as warm, trusting, optimistic, magnetic, enthusiastic, and convincing. Eyes are going to be in real life the people that you just like, the glue people, the people that you just, they have a warm energy. You seem to get along with them. That's beneficial. That's really good for a trading community like what we have with Tier 1 trading is we encourage accountability. We encourage that traders help each other out, and older traders or veteran traders take newer traders under their wing. And the eye personalities are the one that are willing to do that. They're willing to help out and put themselves out there and create accountability groups and get the younger traders on track. That's a positive sign. Some of the negative signs of eyes, though, however, is they like to do stuff with flair. And in trading, what we see a lot of is that this is where the ego kind of outshines the results. A good example is like win percentage. I need to have a higher win percentage. Well, why do you need to have a higher win percentage? Well, because, if I don't win 70% of the time, they're not going to think I'm a good trader. Well, why do you care if they think? I just do, right? They need to be a little bit flashy. They need to do stuff on their own. Instead of taking a system or a strategy that works, they got to create their own one. You see that a lot with the eyes. Also, again, a positive was what they take action. They're really good at taking action. They're really good at kind of getting after it. However, a negative that goes with that is sometimes they rush. Sometimes they skip ahead, right? Instead of taking their time to go through things the right way and research and get organized and schedule a plan, they're kind of more spontaneous, where it's like, I'm just going to do it and I'll figure it out later. And in my experience with a lot of the eyes on the platform, we see them rush through the course. We have a session where we kind of evaluate them. We see that there's a gap, and we got to send them back in the beginning and say, hey, you need to learn this before you can do that. So that's the I category. Next is going to be the S, steadiness. S styles are motivated by cooperation, opportunities to help, and sincere appreciation. They prioritize giving support, collaborating, and maintaining stability, and are often described as calm, patient, predictable, deliberate, stable, and consistent. You can see a lot of those words right there probably jumping out to you. This is trading, right? Predictable, deliberate, stable, consistent. Those are all really beneficial for trading because ultimately that's where we want to get to. However, some of the negatives that come with that are that the S people, steady, right? They're pretty much stuck in their ways, right? They have a way of thinking. It's very hard for them to get out of that comfort zone, meaning they've achieved something, they like it, they're comfortable. It's hard for them to change. And in the trading sphere, this is very similar to the growth mindset. I was in this kind of predicament years ago where I was fixed. I was fixed on the way I was thinking. I wasn't open to learning different ways or listening to different ideas or hearing different tactics. I only cared about what I cared about because I was comfortable. It was working for me, and why change? So that's going to be a problem for S's, right? Especially if you have prior trading knowledge and you're embarking on a path where you have to learn something different. There's going to be a little bit of a buffer there, where it's going to be a little bit of a struggle to convince yourself to kind of forget, or at least put to the side, what you thought you always knew and accept new information or a new way of doing things. That's going to be very difficult. The good part is once you get past that area and once you start to get comfortable and get steady with your new way of thinking, these traders are very, very, very good psychologically. These are ones that are very robotic. They don't really sway emotionally. They just follow the plan. They follow the rules. They stick to their script. And that's a massive benefit in trading down the future, because we know that most traders fail simply because they don't do what they're supposed to do. Our last category is C. I'm not going to embarrass myself by trying to say it again, so you know what it is. The C word. Well, not that C word, another C word, what we talked about earlier. I don't want YouTube to take this video down. This is the analyst, right? C styles are motivated by opportunities to gain knowledge, show their expertise, produce quality work. They prioritize ensuring accuracy, maintaining stability, and challenging assumptions. They're often described as careful, analytical, systematic, diplomatic, accurate, and tactful. That's everything you need to know in a trader, right? You probably saw it as soon as you saw analysts, right? These are very, very good traits for trading. We see a lot of our traders end up in this category, right? You see some of the goals are stick to your processes, right? Be accurate and correct, demonstrate stability and reliability. The hard part is this, though. You see the challenges. Resist being overcritical or over analyzing and isolating themselves, right? Making, maybe not making quick decisions, but being able to make decisions in a timely manner, right? The issue I see with C's, and again, there's lots of positives, but the negatives I see with C's are that they tend to be perfectionists, right? They tend to, especially in a quantitative industry where, because math doesn't lie, math should be the same. They tend to be perfectionists where they want everything to be perfect. They want to do it a certain way. They don't want to move on to the next thing until that certain way is done. And if they don't get that thing perfected, they don't move on. So this is the opposite of kind of the I category. The I category was kind of jump the gun, don't do the work, rush through the course. These are the people that take a little bit too much time. They're hunting for perfection in an industry that can't be perfected, right? There's no such thing as perfection in trading. And to add to that, what's very difficult is that, again, you can do everything right as a trader and have the outcome still be wrong. For C specifically, that's very hard to process. How can I do everything right by the book? And it's supposed to tell me I'm supposed to get this outcome from it, but I didn't. That's a tough pill to swallow for many of them, and that's a big obstacle, just that acceptance, I guess, in becoming a trader. But again, the positives well outweigh it. I mean, these are the ones that really get after strategy development. They comb through everything with a fine, detailed comb. They do very intense, very analytical, very specific and deliberate back testing. They're looking at every single possibility. They're dotting every I. They're crossing every T. It takes them a little bit longer, in my experience, to get through the process because they're so detail oriented. But unlike the I's who get through it, then got to go back because they made a mistake, the C's typically, once they do it, they take their time, they do it right, and once they do it, they never have to do it again. Now, as you can see, there are pros and cons to each personality type. And again, we all share certain traits from all four of them. But in my opinion, there are two that probably stand out more than the others when it comes to trading specifically, just given my personal experience and what I am, as well as traders that I've worked with. Just food for thought, I am a, what do you think I am before I say it? Guess. I am a DI. Now, I wasn't always this way. Years ago, I was a C. As I got into trading, as I started becoming an entrepreneur, I actually moved more to a DC. And the last time I took this test, which was a few weeks ago, I actually moved towards the DI. So it shows that you can develop, you can change. And a lot of that is based off what you do, right? Me being a coach now, me being an entrepreneur, kind of a business owner, I've had to make certain adjustments in my life and how I handle myself that are more, more in line with what that job requirement requires. Yeah, you guys get what I'm saying. So I say that because when I give my opinion on what I think are the best two categories, if you're someone that is in another category, this doesn't mean that you can't be successful. I don't want you to have any limiting beliefs saying, well, this dumb test said that I am here, so I can't be a successful trader. No. You have traits in all four categories and you are able to shift, and you will shift throughout your life. But if I had to choose two traits that I see the most in trading, and mostly with the traders that I work with, it's going to be the D and it's going to be the C. And again, the D is dominance. A lot of the traits I see in trading are that these people are very self-driven, right? You are very goal-oriented, right? It takes a lot to jump out of your comfort zone to do something like trading, especially when most of the world is saying that you're gambling, you're wasting money, blah, 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 right? That dominant personality, you are an independent thinker, you are really goal-oriented, you are driven to get the job done, and you're typically pretty good at laying out a path to success. The second category is going to be C, right? C are the analysts, right? They're more analytical. These are, you can obviously tell that's a great trait in trading, right? Trading, digging into the numbers. When we're creating a rules-based trading system, you have to be detail-oriented. You have to be able to follow that process, right? Process over outcome. Be able to lay out the steps and be very meticulous with doing if this, then that, if this, then that, if this, then that, and not necessarily relying on emotions to make your decision. That steadiness, I guess, that comes with the C as well as the S category is very beneficial in trading as far as being consistent in your routine and being consistent with your analysis and whatnot. So those are my picks. I would love this though. I would love to hear what you guys think. So 2 things, right? Take the test. I'd love for you to take the test. I'll put a link for this one, this assessment, and the 16 personalities in the description box below. I'll give a link to the free DISC assessment. There's a paid one that gives you all these other weird, scary details about your life, but I don't think you need to do that. But take the test, and I'd love to hear where you lie on the scale. I'd also love to hear what you think, I guess what you think, which personality traits, what category do you think are most beneficial for a trader? And again, this is not to say all be all. We're not saying you have to be in this category, but just curious, what traits do you see that successful traders have? So leave that below. I'm going to read through the comments, and what I'll do is I'll do a longer form on this topic. So I'm really intrigued by it for a future episode on my Trading Coach podcast, and I'll also read through what you guys are saying and make that a part of it. All right. So thank you guys for joining. As always, hit that like button, subscribe, share. Head over to tier1trading.com if you want to get involved with what we're doing over on the platform. And until next time, plan your trade, trade your plan. You guys have a great weekend.